Kunj Bansal as well joins in with his thoughts on the markets and stocks. Kunj, hi, morning. Let's take up the discussion. What we were chatting with Sandeep about. 2017 was all about playing it safe to be able to brave the volatility that the market saw and across the globe, really. Do you think 2019 it's time to make that switch to mid and small caps, or do you think it's safer to stick by with the large caps per se?
Yeah, I wish there were easy answers to all these questions, and of course we have been seeing that the market does behave totally unexpected to what everybody expects and goes contrary. In fact, before I exactly answer that what could be the expectations of 2019, so despite repeatedly going wrong, we have to obviously keep analyzing and keep thinking that what are likely to be the outcomes going forward. In fact, if we look at 2018 performance, as we all know, the large cap indices have largely been flat. Let's see what happens today, but it will be 3-4% kind of gain. Within that remains hidden the fact that which you mentioned, that the mid cap and small caps have sharply underperformed. Also the fact that within the flat movement of the large cap, it doesn't show the sharp volatility that we had almost 4 times in 2018. So we had from 1st Jan of 18 to 1st Feb market went up sharply, then it came down, then mid-year June, July, August it sharply went up, and then within 2 months it crashed 15% from 11,700 Nifty to 10,000. And then in the last 2 months we have seen a sharp 10% recovery, of course ending the year at flat, largely flat movement, 4-5% kind of movement. Going forward 2019, one of the biggest event which we all know, and so to that extent there is no negative surprise, there is the general election. Now one can keep arguing whether that will have an impact on the market or not, but that is something that will be there in the market. If I keep that event in the mind and the fact that it will be almost midway in the year, my expectation would be that 2019 on the large caps we would largely be ending like this year as well, which will be flattish return. But yes, within that, given the fact that selectively we should see some earnings pick up, and the valuations on a relative basis, mind you, I am saying relative basis because India has far lost the glory of being a cheap or a value market 3-4 years ago, or maybe earlier also. Even today, after flat movement of the market with 14% mid cap correction, 24% large small cap correction, I don't find value in the Indian market. So coming back within small and mid caps, with selectively earnings picking up and relative valuation of being offered to us, the outperformance is certainly expected from the mid and small caps compared to large caps in 2019.
Kunj, hi there, morning. Now, while it has been a roller coaster ride for the equity markets, it also has been fairly choppy for a lot of the infra plays. But what's the view going ahead as we go into election year? Do you think that infrastructure policies, reforms, etc., are likely to be focused on with a lot more clarity, and that therefore we could see some sort of an incremental change in the fundamentals or the fortunes of these infrastructure stroke real estate companies?
Yeah, so again, before going on my view going forward on the real estate and infrastructure companies, I would briefly like to touch upon the historical movement, and not only of the last year, let's say last 2-3 years or 3-4 years. In fact, it has been quite a surprising underperformance from the infrastructure space in last 3-4 years. And why I am saying surprising is that there has been significant government focus, significant money invested, significant expenditure undertaken by the government, specifically in roads and highways. And that's where, as I say, that there has been a surprising underperformance, because there has clearly been a lot of money invested largely by the government in the public projects. Of course, the private sector investment has been missing. Now, that underperformance probably is because of the individual company factors which have affected almost all the companies in some or the other way. Going forward, this is a sector which is where it is very difficult to take a call in the general election year. Now, why I say that is that we have done a lot of data digging and analyzing the specifically not only the years, specifically the election years, and within that also more so in those election years in which we have seen government changes, the political party changing hands. Now, what comes out, which once I say will look quite obvious and intuitive, is that the major changes take place in the investment oriented sectors, which are these which you just mentioned: infrastructure, roads, highways, power, oil and gas, telecom, etc. So that's where, unless we have a clarity on whether the same current ruling coalition will continue to lead us the next 5 years, or will there be a change, I don't think I would like to take a call for the next 6 months on the investment oriented sectors, on the infrastructure sectors. Where I can take a call, and which again got proven by the data digging that I was mentioning, is that the broader consumption space is something which doesn't get affected by the government changes. As we all know, the consumption gets affected by the rising living standards, increasing awareness of the people, increasing hygiene level, increasing digital changes that are happening. So those are the spaces wherein the government change doesn't have any say. So if I have to take a bet in this year, spreading through the elections, despite the valuations not being attractive for the good quality fundamental companies showing reasonable growth, my bet will be to take on the consumption sector and wait till the election results for taking a bet on the investment sectors.
Why wait for elections, Kunj? Because historically we've seen that election year always has turned out to be a good year for markets. I mean, that's not my data, that's not your data, that is the data which is coming from HDFC Mutual Fund. So, you know, for those who wait for elections, what happens is that if the election outcome is on expected lines, or if election outcome is better, markets, they tend to run before the event and after the event. As a result, you never get an entry point.
Yeah, so valid point, Nikunj, very fair point. And not only that, the election years have given decent returns in the market. Let me also, for the benefit of the viewers, put in one more data point, that if I look at the performance of the Indian market, surprisingly it has been amongst the best in the years in which the India has been ruled by multi-party coalitions instead of a one large single party led coalition. Now that's a surprising data. As I said, Indian markets have given far better returns in those 2.5 years of the government which have never completed their terms. So to that extent, it's a difficult call to take on the risk. Why wait for election? 2-3 things. One, yes, from now till in next 6 months till we, or 4-5 months till we have election, if I get a sharp correction in the market, that will make it a better point of entry, instead of now, as I said, in the last 2 months we have already up 10%, on a year basis also we are up 4-5%, with valuations not being really that attractive, only on a relative basis they are attractive. So that's one, the way I would look at it. Second, as I said, the way I would look at it is that yes, if I have to take, and which is the bet I would take without waiting for the elections, is the consumption, broader consumption space, because the government changes do not affect that space. I would wait till election, as I said, for taking a bet on the investment oriented sector, which is where we have historically, based on the data, we have clearly seen policy changes affecting these sectors significantly, especially if the government changes, the ruling party or the coalition changes at the government level.
Kunj, wanted to get your sense on when exactly will we see a meaningful turnaround in the auto sales. And I'm not talking about CVs or passenger vehicles here, more so the lower end of the curve, the two-wheelers.
Yeah, so I think to try to find an answer to the question that when exactly will we see a big and a sharp turnaround, I'm sure you mean in terms of specifically the volume growth returning to the historical highs of double digit starts at 10, but let's say more than 10. I think 2-3 things we have to keep in mind, that now India is no more a less penetrated or an under-penetrated market when it comes to two-wheelers, which it used to be till 4-5 years ago or even earlier. Now those are the years in which we saw the growth rates right in the beginning of about 25-30%, slowly falling down to 20s and then to 10, 15, 10, and now have come to single digits or to less than 10 or here or there. Now within that, of course, have been the effects of the factors like demonetization, like GST. In fact, last few months have really been challenging for the automobile sector because of the insurance costs going up, because of the fuel prices going up, and then because of the financing costs, financing options either not being available or continuing to go up. I think the new normal going forward should be around 10%, and that is what should be the expectation. In fact, if we do around 10% odd or so for the industry level, that should be a decent expectation, and that is what we should call a decent performance from the automobile space. When will it come? I think we are already there on an industry aggregate level. If we see after the effects of last 2 years, major macroeconomic events and sector specific events having been taken into account, I think we should start seeing anytime now the 10% kind of new normal growth rate in the two-wheelers, which should be there. Again, within that, the question comes that whether that will result into stocks outperformance or not. I think that's a challenging question, because the valuations there are again not really that comfortable, which is where one would like to take. Now, does it mean that one should not participate in the India equity story, or specifically in the automobile or the two-wheeler story? I don't think one can take a call, because India is continuously being governed or driven by the increasing equity cult, which means that the increasing equity inflows that we are seeing, and that is what is adding fuel to the increasing new normal on the valuations. So I think with the kind of good managements that the companies have within two-wheeler space, one has to take a call and one cannot stay back.
Kunj, just wanted to get in a quick word. We've been monitoring crude oil prices very closely now, with NYMEX around $45 a barrel, Brent at about 52. Take us through which are the sectors that are closely linked with crude oil prices that you believe could potentially benefit from the crude price movement, consumption, or even what the correlation is with some of the oil marketing companies that have been in focus of late.
Yeah, so again, I don't think I'll have anything new or unique to add as an answer to this question. As we all know, the clear beneficiaries of the oil price reduction are paints companies, and we have already seen their prices, and as a result valuation sharply moving up in last 2 months after the sharp correction that we had in October end. So that's one straight beneficiary. Second is some of the chemical companies. Extending that further are all the plastic processors, plastic companies that are clear beneficiaries of this whole trade on the oil that has been there. And then further these third or the fourth level derivatives will be the very specific specialized chemicals, specialized perfumes, specialized ingredient suppliers to a lot of automobiles, lot of tire manufacturers, lot of in fact food product manufacturers and pharma manufacturers. So those are these very small sub-segments of the beneficiaries of these that will be there. As I said, is there an investment opportunity in there at an expensive valuation? It is still there, because the large part of it belongs to consumption, wherein we have been seeing growth, and one cannot stay away from it. Specifically oil marketing companies, I think I don't understand that trade, from an investment point of view, rather that call from an investment point of view. It's a very good trader's delight, the whole sector and the companies, because instead of largely being driven by the oil prices rise or fall, these companies do get driven by the market sentiments, do get driven by the government sentiments.